Imagine this. You take a home loan in 2017. For 8 years, you make every payment on time. By 2025, you have cleared every rupee you owe. You call the bank for your closure letter. They say, we will get back to you. You ask, when? They shrug. Could be next year. Could be 2030. Months later, another department calls you to recheck your 2017 payments. You send them everything, they close the file. When a third team requests the same records, when the fraud prevention unit summons you again, same loan, same payments, fourth time, explaining the same exact thing, you're trapped. Not because you failed, because the system never says done. Sounds absurd, right? That would never happen with a home loan. But it's happening right now with India's GST. When GST launched in 2017, it came with a powerful promise. One nation, one tax, one simplicity. Yet, here we are in 2025 and businesses are still receiving notices for 2018. A manufacturing company in Pune gets an audit notice for that year. The person who handled their taxes back then retired. The software they used long gone. The records packed in boxes in a warehouse. The team digs everything out, rebuilds the files, responds to every question, and finally closes the audit. 6 months later, a different GST department sends another notice. Same year, same transactions, same questions all over again. It's a loop you can't escape. I've spent a decade and a half as a chartered accountant, helping businesses navigate Indian tax compliance. We help global companies enter India and Indian businesses grow. We have guided clients through hundreds of GST audits. I'm telling you this not from theory, but from the boardrooms and back offices where this problem lives every single day. So why doesn't this happen with home loans? 5 simple rules. GST has none of them. First, a defined timeline. When you take a loan, you know exactly when it ends. 15 years, 20 years, 30 years. With GST, there is no such boundary. The law gives tax officers powerful tools to audit businesses. These are listed in sections 65, 66, 67 and 70. Section 65 lets them audit your books. Section 66 lets them demand special audits. Section 67 lets them inspect your premises and seize records. Section 70 lets them summon persons to give evidence and produce documents. Powerful tools, all necessary for enforcement. But here is what the law never says. When must these audits start? When must they end? Compare that to the rules for collecting tax. Those have crystal clear deadlines. If there is no fraud, the government has 3 years to tell you, you owe us money. If there is fraud, 5 years. From 2024 onwards, there is an even newer rule with more precise timelines. See the pattern? The government keeps making the collection deadlines more and more precise. They have updated these rules multiple times. But the audit rules, still no start date, still no end date. The government knows its deadline. You don't. What GST needs is simple. Set a deadline for audits to begin and close within 3 years from the due date of annual return. That's it. After that, unless there is actual fraud, the year is closed. And let's be clear what fraud means. Not mistakes, Not interpretation differences, but deliberate suppression, fake invoices, willful misrepresentation. Kind of stuff that should never have a time limit. For everything else, 3 years is enough. And here's the second part. When they do audit you, they should look at everything for that year in one go. All your tax credits, all your refunds, all your paperwork. 1 year, one review, one final answer. No bits and pieces scattered across 5 years. Think of it like a school exam. You take the test, the teacher grades it. You get your result. The teacher doesn't call you back 6 months later to regrade question 5. That would be absurd. Same principle here. Second, a single point of contact. Your home loan is managed by one bank, one account, one person you talk to, one decision maker. GST doesn't work that way. A business owner today has to deal with multiple different departments. Some at the state level, some at the central level. There is the local tax office, the investigation team, the intelligence unit, the audit commissionerate, and the anti-evasion squad. All can examine your records. All can summon you, often for the same year, often asking about the same transactions. And here is the problem. They don't talk to each other. One department closes your case. Another opens it without knowing the first one already checked everything. Imagine if 7 different banks all claimed they were managing your home loan. Each one demanding documents, none of them coordinating. Complete chaos. What GST needs? One department per time period. Once that department completes the audit, no other department can reopen the same year unless they find new evidence of fraud. You should know exactly who you're dealing with, what they are checking, and when it ends. The bank can't just call you up 2 years later and say, actually, we want to review your 2017 payments again. GST has no such paper. Even after an audit ends, even after you have answered every question, another notice can show up months later for the same year. You have no official document that says, this year is settled, you're clear. The fix. After every completed audit, the department issues a closure certificate, a dated, signed document that says, we have examined financial year 1920, all issues settled, no further action unless new evidence of fraud emerges. Make it legally binding. Upload it to the GST portal where everyone can see it. Just like a loan marked paid in full. Fourth, a shared system. In banking, once your loan closes, it's updated in the computer system instantly. Every branch can see it. Every department knows. Nobody can just randomly reopen your account without authorization. In GST, different departments work in silos. One closes your case, another department doesn't see that and opens it again. Nobody is coordinating. The solution: use the GST network that already exists. Right now, it tracks your returns, your payments, your refunds, all in real time. Add one field: enforcement actions. When the audit department closes your 2020 case, it shows up instantly. DGGI sees it, anti-evasion sees it, state intelligence sees it. Before opening a new inquiry, they check, has someone already examined this? If yes, they need to justify why they are looking again. Complete transparency. No duplicate work. No surprises. Someone has to be accountable. If your bank delays giving you the closure certificate after you have paid off your loan, you can complain to the Reserve Bank of India. The bank gets penalized. They face consequences for wasting your time. In GST, there is no such accountability. A tax department can leave your file open for years and nobody holds them responsible. All the pressure is on you, the business owner. Keep responding, keep waiting, wondering when it will end. Here is what fair looks like. Yes, businesses should face penalties if they delay their tax filings. Departments should also have to justify why they are keeping a file open for years. If you enforce compliance on one side, you have to enforce closure on the other. Now, maybe you're thinking, this sounds bad, but it's never happened to my business. My chartered accountant handles all this. Why should I care? Fair question. Here is why this affects you, even if you have never received one of these notices. You're already paying for this problem. Your CA isn't just filing your returns. They are keeping records for 7, 8, sometimes 10 years. Because there is no closure deadline. All that extra caution, all those files they are maintaining, just in case. You're paying for that. You're also paying through the money you're not using. That buffer you're keeping aside because you can definitely close 2018. It's capital not growing your business. That expansion you're delaying because you can be sure your old tax years are settled. That's opportunity cost. And here is the thing. Just because it hasn't happened to you yet doesn't mean it won't. GST is only 8 years old. Some businesses are only now getting notices for 18-19. As enforcement ramps up, more businesses will face this. Your CA can respond to notices. They can compile documents, draft replies, represent you. But they can give you what the law doesn't provide: finality. They can hand you a closure certificate that says 2019 is closed forever. Only reform can do that. Now you might be wondering, if this is such an obvious problem, why hasn't the government fixed it? After all, they've amended GST over 200 times since 2017. They have refined rules, notifications, rate structures, introduced e-invoicing, created the National Anti-Profiteering Authority. They are clearly willing to improve the system. So why not this? Honestly, it's probably not some master plan. It's inertia. I have worked with tax departments. These are intelligent, dedicated people operating within a system designed without closure mechanisms. The old tax system didn't have closure limits. So when GST was designed, nobody thought to add them. And now 8 years later, fixing it requires new laws, retraining thousands of officers, and changing how tax departments have always worked. It's hard, so it doesn't happen. But there might also be some fear holding things back. Fear that time limits will let evaders escape. But we already distinguish between mistakes and fraud. 3 years for honest errors, 5 years for fraud. Apply the same logic to audits. Closure for the compliant. No time limits for the fraudulent. Fear that departments can't audit everyone in 3 years. It's backwards. Time limits force prioritization. No deadline means no urgency. Set the boundary. Get the discipline. Fear of looking soft on evaders. But frame it correctly. This is efficiency, not leniency. Countries worldwide have audit limits. It doesn't make them weak, it makes them organized. The real question isn't whether closure limits could be misused. Any law could be misused. The real question is, does endless uncertainty hurt more businesses than time limits would help evaders? 8 years of evidence says yes. These 5 principles aren't some radical new idea. They already exist. Banks use them, insurance companies use them, credit card companies use them. Millions of Indians interact with these systems every day. The framework is proven. It works. It just hasn't been applied to GST yet. We talk a lot about ease of doing business. We measure it. We rank ourselves against other countries. We announce improvements. But here is what those rankings don't capture: the mental exhaustion of never knowing when you're done. The stress of keeping 7 years of records ready just in case. The impossibility of planning your business when the past keeps reopening. Certainty isn't a luxury, it's infrastructure. For that manufacturing firm in Pune, the one still answering for 2018, certainty is what lets them plan 2026. When a business can't close its books, an investor can't assess the risk. When compliance never ends, growth never begins. India is building faster than ever. New roads, new factories, new technology, new global partnerships. But none of it lasts without one thing: trust. Trust that when you follow the rules, the system recognizes it. Trust that when a year ends, it stays ended. Trust that you won't spend tomorrow explaining yesterday when you're trying to build the future. Closure is not leniency. Closure is maturity. GST was designed to be a good and simple tax. To truly be good, it has to be fair. To truly be simple, it has to have an endpoint. We solve this problem with home loans. We can solve it with GST. I am Manjunath. I've spent 20 years in Indian tax and accounting, and I believe we can build a better system together. Thank you for watching.